Welcome to June. I guess we got too many. Oh, we don't get June marks the end of the spring angel season. And the good news, bad news is that since we don't have a meeting next month, we won't see companies, but we will have our annual member meeting also on the third Wednesday. It won't be here, it'll be online. So expect an invitation. We're going to revisit the discussion that we had in July of 25 that resulted in some pivots on our membership model. And we're going to do a feedback session, see how that went. So please do join us a month from now. What is the date, Michaela, for the July membership meeting? It's like the 20th, I think.
It is the 15th.
15th. Okay, I was within 5.
David?
Yes.
For that meeting, I know I'll be traveling and probably others will too. Can we also have a virtual way to connect to that?
It'll be exclusively virtual.
Yes.
It'll be a Zoom.
Okay,
Yeah.
I just didn't hear, I'm sorry.
No worries. You gonna be in Philippines? Where are you gonna be?
Just up north. In a bathing suit, which you don't want to see.
Oh, I don't know.
Camera on,
be
come on.
Insert my camera.
Yeah.
We are so grateful to our kind sponsors, J.P. Morgan, Michigan HR Group, Ed, raise your hand, Ed, there's Michigan HR Group, Taft and Barnum Law, without whose support this wouldn't be nearly as sparkly as it is. Our club is a club of accredited investors. We don't check your pocketbook at the door. This is a self-certification process to answer one of our FAQs. Our DEI is all deal flow, engagement, and integrity. We want to have the best deal flow. So you come. Engagement, so you actually ask questions, engage with the startups, God forbid even invest in them. And then the integrity of the group depends on our all, as a group, respecting the process and the information that we're going to hear tonight. It's for the purposes of investing only. We do all the work, which means the scouting and the screening. We've got a bunch of great scouting that built the program tonight, which I'll tell you about as the companies present. We do the diligence and recruit the SMEs, and of course, we also support the group with our premiums. The premium model is what we're going to talk about next month. Folks, the screening team has had a couple of seat changes in it, and we're better for that. But if screening is your bag, if you want to look at, say, 5 times more companies than you would normally see in a meeting, commit to spend 3 hours a month with your fellow angels, and you too can see what the top of the funnel looks like. Craig's not here. He's our designated angel in residence at the Velocity Accelerator. I too have done some angel in residence work at the accelerators, raising the literacy of the innovators so that they come to us better prepared, and of course the sponsors that we've acknowledged. So for Angel Ed for this month, I want to talk about a signal that has been bubbling up probably for the last couple of years that I couldn't put my finger on. And I got into a jam session late one night with ChatGPT and actually figured it out. So you're going to see for the first time the fruits of this plunge into what has changed in the last 2 years. We're going to talk about innovation and growth. We're on a trend line, so we're extrapolating from what we've seen. Liquidity, because we don't make money until that happens. And what any economic uncertainty as we head into fourth quarter may do to our deal flow. So this should be a surprise to no one. The big risk is at validation, less risk at pilot, a lot less risk at customer, and what happens is the big idea makes it out into the world. This is the growth of our 37 portfolio companies, and perhaps a few more that we'll meet tonight. What economic uncertainty does, though, to the innovation process, we've got a great pool of innovators. They're coming at us in all 3 of our pillars, in life science, in software, and in hard tech. And their incentives to innovate are actually growing. And I'm not just talking about the Michigan Innovation Fund, Pitch Me, But the preponderance of accelerators, of economic developers no longer feeling that startup is a bad word, and then the fact that as uncertainty ripples through all sectors of the economy, it shakes loose that innovation. We saw that in 2000, we saw it in 2008, and then we saw it again at COVID, where the fact that there's uncertainty is often enough to rattle an innovation loose, whether it's pointed at the crisis of the moment, which was the case with COVID, or whether it's just a frustrated employee wanting to run it solo. From the investment side, our deal flow lags opportunity. We've seen a lot of great stuff coming at the top, and that was my complaint from earlier. But let's look at the rest of the picture. Our incentives are flat or declining. There are no programs that are goosing us outside of the usual 1044s to make additional investment. R&D tax credits aren't filtering back through the investment community. We don't see angel tax credits yet here in Michigan. And that uncertainty may lead some investors to flee upmarket, to either become LPs or, if they're LPs in funds, to demand tighter investment pieces from those funds. So I mentioned that the liquidity event is how we make money. That means that we're not waiting around for an IPO, for an LBO. Oh, we hate LBOs. For SPACs, we're not interested in dividends. We want to get our money back with a multiple. And this is what that curve has looked like for the last, say, 10 years. If you index at 100 in 2015, this is the result of COVID incentives. A lot of cash got dumped into the economy in the form of economic relief that immediately made it to innovators. And that was the peak in our deal flow, 80 percentage points above where it was in 2015. And then just as fast as it rose, it fell. It actually fell all the way down to where it was. That's the drought that we were responding to last year. And we're now back on the upswing. That liquidity doesn't come from nowhere. It always starts in the markets, and it either filters through a public company because a public company bought one of our portcos, so that's their acquisition, and we're getting the money that started over there in the public markets, or it went through an IPO of a private company. And this used to be a much more significant portion, this used to be a much more significant portion of our deal flow. We would see Fortune and global companies acquiring startups like 2 to 1 over a roll-up or a private company. So that was the question that I dug in on, and that's the chart that is being foisted upon you today. This is what I'm used to. This is that 2 to 1 that I was talking about. Right after the bubble in COVID money, that was already trending down. Now it's reversed. We are selling more of our startups to other private companies than we are to large corporations. What does that mean? Market indices are currently really high. We may see a correction. I don't believe all the prognosticators have said that we're headed for one. But regardless, when there's uncertainty, it freezes public company deal flow. They tighten up. Things either stop or they go so slowly that they might as well have stopped. Private goes the opposite. So we've already seen a rebound in the IPO activity, and I'm not even talking about the $3 trillion IPOs that we were seeing this summer with SpaceX, ChatGPT's parent company, OpenAI, and Anthropic. But in the private market, uncertainty fuels deal flow. We love that uncertainty for the same reason that the innovators do, because it uncovers what would have otherwise been opportunities that would have been overlooked because they weren't economically feasible or they just weren't even available. So your takeaways today, given that that chart that I just presented, in addition to less uncertainty, we're seeing more early deals. The early deals, the ones where we can get in at a very good valuation because they haven't got a lot of validation. There's still plenty of risk. They're basically, we're the risk capital that's de-risking this valve process. Whoop. I should have put that slide next. Then the constrained capital, that's the capital that has a lot of accountability associated with it. And I include VC in that. VCs are accountable to their LPs and will not get another check from them if they don't perform. But of course, constrained capital is, whether your SEC filings are quarterly or twice a year, you're still transparent to your shareholders. So risk capital, we're seeing lots more opportunity. We're going to see more early exits because these roll-ups are happening earlier. And if you're holding on for that 1202, yeah, maybe not. Maybe you're not going to hold it for 5 years this time. Look at each deal and decide, is this one that I think is going to last for 5 years? It's going to grow for that period. And work your portfolios accordingly. So this answered some questions for me. I hope it answered some for you, but if it raised some questions, let's do that next month because that's when we're going to have the online free flow. That's my portion of the show. Now I get to sit down and, I get to introduce 6 amazing presenters. I know I say that every month, but every month we keep raising the bar. I'm so happy with this cohort for June of 26. And our first presentation comes from a contact that Michaela, I think we made this one on demo day.
Yeah, long time ago.
Long time ago, but you
2
have to
years,
let Christina know that
Yeah.
Brittany Dabney is presenting tonight.
Mm-hmm.
Brittany, would you come up please and tell us more about what you're doing with Ecosphere Organics? And you got one slide.
Yeah.
Okay, here you go.
Well, good evening, everyone. Thanks for having me. I'm Brittany Dabney, founder and CEO of Ecosphere Organics, where we take food and agricultural byproducts and convert that into manufacturing-ready raw materials. So this can look like pigments, fillers, bioplastic sheet material like you see here, and it can be used across a variety of industries like packaging, fashion, and accessories, which is where we're starting at, and then of course paint products, things like that. And so why us, why now? Primarily because when I first started Ecosphere Organics, I saw 2 problems. We have a lot of organic waste that we know harms the environment, and it's high value waste. However, we also have brands, manufacturers that are looking to source sustainable raw materials for their eco-friendly products. And so the issue right now is they really don't have a source to go to, similar to a traditional raw materials company, where you can source your powders, your sheets, things like that. Primarily because the supply chain is very difficult when you're sourcing overseas, the inconsistency in the raw material supply, and so being able to have a company in the US that operates as a raw material company but provides these materials, which are a form of intellectual property that can be licensed out to companies, is pretty important. And obviously these companies don't want to be waste managers, they just want to focus on the end product. And so why Ecosphere? Well, my background's in environmental science and toxicology. I studied microplastics in the environment here in Michigan. And when first starting this company, it came from a previous startup. So we won $25,000 to start a biomaterial prototyping lab. And that got us the equipment to do R&D work, to develop the material recipes. However, through that learning and customer discovery, we realized that's when a lot of companies that are already in the material space, they don't have a supplier, so they don't have that consistency in their supply chain, the variation of raw materials. Packaging is fine where you'll get clear material, but if you want something leather alternative, you don't have that variety, so that's where we come in. And since starting the company, we've got over $140K in non-dilutive funding. We sold materials. We've done pilot validation. So we had a pilot downtown with Bedrock, Urban Tech Exchange, Shinola, and NoHo Hospitality Group. We've validated with restaurant partners, subscription models. So we validated at least one customer in each of our product or service offerings that is traditional to a raw materials company. And so now we're moving to the next phase, so the scaling phase, and seeking, that pre-seed funding primarily for outreach to manufacturers, so larger companies, where we can validate the production of our raw material inputs to a manufacturer that is producing a product consistently, rather than focusing on one-off projects. And so pretty much we're kind of at that stage again at scaling, looking for manufacturers. So that's what we're hyper-focused on this year, and we're on track to do that. So really excited about that, as well as being able to source additional raw materials, both locally here in Michigan as well as internationally. And so, yeah, we invite you to join us as Ecosphere Organics creates the material backbone that helps circular manufacturing work at scale. Thank you.
Where did I set it? Okay. And you said we can't advance the slide without it.
No. Do you not have it in your pocket?
I thought it was in my pocket.
Do you want me to switch to mine?
No, it's not.
No, this is mine.
You were over
I can
there.
switch to it though.
In case of the over there in your book.
Thank you. Notice I'll edit that out of the video. AceCam Golf comes to us from our friends at Invest Detroit Ventures. Belvin Lyle calls up and he says, have you seen these guys? And I'm like, I've never heard of these guys. They're pretty excited about it. They want to get some investor validation. What you often see, remember ID Ventures is one of those incentivizers. They have Michigan Innovation Fund money. They want to see the rest of the community going along with them when they move on a company. So let's see what Belvin sees in AceCam Golf. Michael?
Thank you, Dave.
There you go.
Yeah. Okay, 5 minutes. This is fun. And I have a golf company, and I've never been here. This is a beautiful place. I have a pretty good network of golfers and country clubs, and I have never played here, which is a shame. So if anybody belongs here, you guys want to take me out? I love that. Okay, so I'll start. What we do taps into three very lucrative industries here. I'll just touch on them, and then I'll tell you what we do. Golf. Golf is a powerhouse. There's, by a substantial margin, it is the biggest and most powerful recreational sport in America, probably worldwide. I say recreational sport, obviously you think, oh, soccer worldwide, but we're talking about direct economic impact. The golf industry is a beast. Over 17,000 courses in the U.S. alone, 45 million total golfers now. That is incredible because 27 are outdoor golfers, but because of the advent of simulators, Top Golf, different ways to engage in golf, that number goes up dramatically. There's a lot of people who play golf in some form, but not actually outdoor courses. That fits well into what we're doing. Sports betting and the advent of legalized, the floodgates have opened for legalized sports betting. Skill-based gaming has been going on for a long time. If you think of esports, it's wild how many platforms are even supporting electronics gaming for skill-based gaming. These numbers are, these can be debated. 4.5 billion in legal golf bets placed. That's more up by around 6 now. And what we're talking about is on BetMGM, DraftKings, FanDuel, all of the legal sports books. We're talking about in professional bets. It is very hard to quantify how many bets are being placed by these golfers out here. It's a lot, though. What we have going for us in golf is that betting, legal side betting, betting on yourself, is kind of interwoven into the fabric of the game, and we tap into that. So while it's hard to quantify, There are some articles estimating over 50 billion in side bets wagered, just like right here at this country club. And the third one that we tap into is digital content and social media. That needs no introduction. Everything is content nowadays. And so I'll show you how we tap into all three. So this idea came when I got my second hole-in-one. It was years ago, and my friend asked, what would you pay for that video? And the celebration was wonderful. It was exactly the type of hole-in-one you want. You saw it go in, you had your friends and family there, and I'm buying drinks for everybody at the clubhouse because that's customary. When you get a hole-in-one, you actually buy everybody drinks. And we're sitting around, and I was like, oh, geez, I don't know, I'd pay 10 grand for that video. I'd pay 20 grand for that video. Like a really nice video. And then it got me thinking. And we had autonomous vehicles at the time, right? And we're landing on Mars. I'm thinking, how do we not have a couple cameras on signature par 3 holes, signature golf holes, where people can relive their best moments? And I took it one step further and one step further, and this is 3 years ago, and I put everything I had into researching, how to actually make this, doing feasibility assessments and thinking, how can we really do this? And so we'll start here and then we'll work our way back. So what we do, everyone, is we install cameras on signature holes. We start with par 3s. That's kind of where the magic happens. I capture everything. The shot, we add shot tracer to it. Everything that happens around the green, I can zoom in with our cameras and see the logo on your ball for putting. I live feed it to the clubhouse. So when these guys are done finishing their round, they walk into the clubhouse and they're not watching sports anymore. They're watching AceCam. They're watching their friends play live on the course. You can imagine if you're a golfer what's happening. They're betting on each other. We don't handle that, but that's what's going on, I promise you. And so I live feed it to the clubhouse. If you hit your hole-in-one, the holy grail of sporting achievement, I send you that footage. And so you never have to tell somebody again about your hole-in-one. You can show them. I give you a plaque, and it says we certified, and there's a QR code in the middle, and you can scan it, and it's a video of your hole-in-one, shot tracer, every angle, the celebration, everything. I give shirts out. We've captured 2 already from last year on our one proof of concept hole. We captured 2. The first woman who captured, it was a business meeting in London, and I got a call and said, Mike, it was the country club that we're at. We captured our first hole-in-one. Please tell me you have it. We see it. I call her. She's crying. Her name's Jen Godfrey, very good player, never had a hole-in-one. And she's crying, and I'm almost crying myself because this validates my dream, my company. And she's going, oh my God, I can't believe you caught it. I didn't know that you captured it from the women's tees. And I said, of course, Jen, that's what it's all about. And that's really what our company is about. So you'll see how we monetize it, but guys, that is really what it's about. It's about capturing the most memorable moments on the course and letting people relive them and share them. And so we live feed it to the clubhouse. It's a hole-in-one. It's you take your daughter out and she hits her first birdie, and you want that footage. Anything that's memorable. I had a guy last year who said, Mike, I stepped on a club and it hit me in the private parts. I stepped on a wedge. Do you have that video? I said, yeah, we have that video for you. I sent him that video. I have a guy throwing a club and he threw it 50 yards, and we tracked the distance, and I made a video out of it. Okay.
Blooper reel.
Bloopers, exactly. So we have top shots, not top shots, bloopers, everything in between.
Michael with AceCam Golf. Whoa, did I push a bunch of buttons? Oh, man. What happened? Okay. I think I was just holding it poorly. Okay. ARMR Systems comes to us from Jumpstart and the Project MedTech group in Cleveland. I met Chips at, actually you reached out to us before the conference, and we met at New Lab last month. And you asked, the first question was, how do I get a deal from? Send yourself to
I said good morning. I said everything.
Yes, you said you were very polite, but you got down to the point.
Yeah.
And sailed through screen. We were very excited to see your presentation. This down button here is what I've been pushing buttons on.
Okay.
But you've been pushing on first.
Okay.
All right. Chips and ARMR. There you go.
Cool. Well,
Well, good evening. Thank you guys for having me here. My name is, again, Chibeze Ainacho, or Chibs, with my friends, CEO and founder of ARMR System. At ARMR, our mission and mandate is to save lives. And the way we do that is through impacting the issue of massive hemorrhage or bleed out. And bleed out's a big deal. Both in the military context and here at home, it's a leading cause of preventable death, right? And we know these stories. On one end, it's warfighters and first responders who get injured in the line of duty and succumb to their injuries before having time to receive care. But conversely, it looks like a difference. It's car accidents, workplace industrial accidents, right? So agriculture, mining, oil and gas, gun violence, and unfortunately there's a rising tide of mass casualty of mass shooter events. I'm gonna go over here. See more than my shoulder, right? And so, despite recent advancements in care, medical care, there is still no accessible or reliable solution for complex trauma. So folks here might be familiar with traditional limb tourniquets or biologics or hemostatics or the variety of things in the hemorrhage control space, but nothing for massive hemorrhage. And so to kind of push that point further, for our most elite warfighters, for local law enforcement, for us, if something were to happen right now, like what would we do? What would we actually do? And the answer is this: you'd probably improvise, you'd probably make it up, do your best. And that is what the most elite warfighters are having to do. They make it up, right? And that is not a solution, that is a gap. And so stepping back a little bit to share about myself, make this a bit more personal. I'm a biomedical engineer, I'm a former clinical researcher, and I'm also the survivor of a traumatic car accident. And so, it's great I'm here, but I know others who have not been able to, right? And so in the early days of working towards a solution, a question we kind of posed to ourselves, and I'll pose to you tonight, is this: what if every soldier could be a medic? Right? What if every Marine, sailor, airman, parent, teacher, leader, every one of us in this room, every investor, be an investor, be a medic, and be empowered and equipped to save themselves or their buddies, their loved ones at a moment's notice, when needed, right? And so that was the big idea. What if we could create this device that improved access to quality emergency care? What if we could also, in the process, kind of append paradigms of care where we could kind of give vulnerable populations the tools to save themselves? So that was the big lofty goal. And so we set after it, right? So through 10 years of eating glass, really tough R&D. I mean, it really sucked. Wouldn't recommend it. But in collaboration with great partners, the Department of Defense, we did it. We did just that. So ARMR presents the JT5 system, right? This is a first of its kind wearable device that controls severe arterial bleeds in areas of the body where traditional tourniquets fall short, right? And so there are a lot of ways to think about what this is as a medical device. What we've done, and I explained it earlier today, was on one hand, we've taken traditional vascular clamps in the OR, and then we said, let's change the form factor to close in peril, and then push it far forward to the point of injury. Right? So that's one thing we've done here. And so this is a soft vascular clamp system. It pairs with this mechanical component. So looking at this first, and this is a true wearable, right? So this lives in the environment. It walks and breathes with the end user. In this picture here, for example, this is Border Patrol Special Operations. Whether you can see it or not, every single person in that photo has a device on. And so this is truly immersed kind of in the environment as a true prophylactic. Well, the way you can think about what it does is the harness itself is a targeting system. Developed a predictive cardiovascular anthropometric, it's a mouthful, targeting system. So we know where everyone's arteries occur preemptively, right? And so at the intersection of that strap and the artery is the X, is where we tell you to go. And so that takes all the guesswork out of it and lets lay individuals with no medical experience, capable of now treating themselves in the case of an injury. The device is lightweight, it's a pretty small form factor. It can treat multiple injuries at once, so in that way it's kind of a Swiss Army knife, if that is a thing of vascular trauma. But what's most important is that this device enables lay individuals, so people with no medical experience, to treat complex trauma, period, right? So now this takes this from the purview of physicians, doctors, providers, and gives it to everyone. And that has a lot of repercussions for outcomes and survivability. All right, so we've done it. We've made this fast, reliable, accessible, super sexy device, and this is backed by a pretty sophisticated tech stack, right? So we've been issued 4 patents. We have a growing patent portfolio with 5 additional applications in the hopper, and that is growing. But beyond just the IP, there's a lot of additional structural, technical, and regulatory barriers of entry here, right? So there's the DoD procurement, which sucks. You know, there's sizing algorithms, there's other things that are under the hood that are protective as an investment, right? To that point, we are a Class 2 510K device, and so to date, we had 2 pre-submission meetings with the FDA. We were joined by the DoD in both of those meetings, and we've come out of that with a very, very clear path to approval and path to market. All right, so tech's great, but there are a lot of several milestones I want to highlight that we're especially proud of. So first thing is we have tremendous user buy-in, right? So from the very, very beginning, day one, we've worked hand in hand with the end users to develop this solution. You know, the JC5 has undergone massive, tremendous amounts of testing, including 8 deployments with U.S. Special Operations, and we've been asked to participate in 3 formal U.S. military exercises to date, right? So tremendous testing, and we have a great partner in the DoD. There in our short vision is that this will be the standard of care and be on every single warfighter. That is why we are here, right? The quote here captures it. This is Dr. Rasmussen, Colonel Rasmussen, the former head of trauma for the DoD. And he said, hey, what they propose now is the concept of proactive positioning, proactive hemorrhage control. For us, this is the next generation tourniquet. So in kind, those words have not been empty. That was 2017, and henceforth, they have been a great partner. So to date, we've captured about $2.6 million in early contracts for government grants, and these are R&D contracts, right? This is paid for the development and help de-risk. And so this has been, again, broad. It's been from the Pentagon to the Air Force, across all agencies. And we just started our most recent contract in March, our second direct phase 2 SBIR with Air Force Special Operations Command, right? So this is ongoing support, and they are strategic, and of course, in enabling the path to market. But again, this shows that we have a great partner and a strategic investor walking with us the way forward. Third point here. So this is not just a military thing. So we brand very military ARMR systems. Very cool, I know. But this problem is bigger than the military, right? So we've had also interest from law enforcement, SWAT teams, EMTs, health systems. So this is a flexible device that can be taken from the point of injury, pre-hospital, through ambulatory care into definitive care. For folks, has anyone seen The Pit? Right? Yes, The Pit. So I think episode 11, season 1. I haven't watched. I got to season 9 or 10, episode 9. But they use a junctional tourniquet. That's what this is called in that season, right? So this is being deployed and can be deployed in definitive care, not just in a military context. Our fourth traction point, I always say, is our team, right? So we've been blessed with a great team, a super active board. Happy to speak to their credentials, but this is a proven, experienced team that have worked through, tremendous constraint, honestly, over the last 8+ years. So we're very proud and happy to have them. And we're also buoyed by a great and broad advisory team. So this is not everyone, but we have a huge ecosystem of warfighters and folks who dedicate their lives to helping others. And so we have great depth of expertise in procurement, defense health, trauma, surgery, research that we can pull from and we do pull from. All right, the business. So this is a big opportunity. So we're targeting a large and growing market of military, law enforcement, providers that are desperate for a solution. So on one end, we have a clear path to how do we get to that. There's a big TAM at the end. We'll start with special forces and SWAT teams. They have decentralized funding. They have a huge need. They're very sophisticated and they're ready, right? This can then design is such that it can then scale. So it can, then scale to large, big military, regular law enforcement, civilian applications, public safety. So there's a lot of flexibility and there's a big opportunity. And at our core, we're just traditional medical device manufacturing. Right? That's what we are. That's the business model. And there's good, sound foundations, right? So there's a well-defined need. There's an opportunity here for recurring revenue. So this is a single-use product, and we can talk more about those nuances later. But that's great. Clear regulatory growth strategy, and then also opportunities for multiple streams of revenue. The next couple slides are very, very busy. I'm told not to do this, but I'm going to do it. So they highlight our go-to-market, right? Like, I just want you guys to get a sense. This starts the conversation, but we have a very, very clearly defined path forward, right? And so the top line is really important. We're here to introduce, integrate, and institutionalize this technology. We're not here to sell a couple gadgets and move on. We're here to institutionalize this. And so for every phase of deployment, we have a very clear goal of who are the primary customers, who are the key influencers, what's the scale of investment, what's the scale of product production, that is well defined throughout, right? So I just, this starts to preview that. Same thing with this slide, right? Even now, we're probably 8 months away from being in the market post-FDA. We're cultivating our sales pipeline. We know the customers, we have relationships with every single person here, the enablers, the strategics, the actual end users, both, again, military special operations, law enforcement, SWAT, folks in the international realm. So we are kind of locked and loaded and preparing for our time in the market. And I like to underline, folks hear government, GovTech, they're like, oh, that sucks. It doesn't, with our early adopters, right? There's a simplified sales process. So there isn't big G government contracting. It is, we meet these units, they have their own money, we go and do a demo, they kind of do a test drive type thing, and then we sell it to them. I mean, so that can vary per the unit, but there isn't bidding, there isn't competing. We have a unit, our PJ unit right now, they have a credit card they can scan immediately. And the threshold for when big contracting comes in is being raised to above 50 or 80,000 per order, right? So there's, we have, within this ecosystem, there are hundreds and thousands of autonomous small units that are ready and can buy immediately. The money slide. So our pro forma, we've taken pains to make as accurate and model as possible. So happy to provide that. But the big thing here is this is a scalable opportunity, undergirded by very strong unit economics. So lines 2 and 3, the JT5, our wearable system, we're going to grow 60 to 70% gross margin. So that's pretty good. And that's just for direct sales. It doesn't include training and credentialing revenue. That doesn't include other opportunities to layer that in on top of this. And so what I say also here is that this is, again, we're not a one product company. This is a platform technology that can scale, right? And so for devices that do achieve this level of scale and maturity, that do have FDA progress, that do have funding, that do have commercial traction, they become really good acquisition targets, right? So we plan to be that company. There's a lot of activity in our space, in the defense health space. Recent $500 million acquisition, one of our prime targets, we have a good relationship with them. They were acquired and they still then bought another company, Sam Medical. They also have one of our competitor devices that we're much better than. So that bodes well. There's the precedent, there's the pattern, and then we do have our targets. So we're looking at 3 to 4 years targeting for acquisition, and that's well defined. We visit these data points every quarter, every board meeting, and then also our floor for M&A is 2 to 4x revenue. That's the floor. Med device is usually 8 to 12 and much higher, but we're very, very confident in this strategy. All right, so how do we make that happen? We make that happen with you guys. We're all going to be on this team, of course, but we're raising $1.6 million to commercialize. This is time to bring this device into the market, and so that the focus of those funds will be for manufacturing, FDA, and sales and marketing. Time to push this out into the environment. This is a preferred seed round, so it's a preferred equity round, so it's very straightforward, 6.5 valuation, and we're halfway there, right? So we've already pulled in about $705,000. We have another $300,000 soft committed. And then I think one thing I think David mentioned, you guys are familiar with the Maryland Investor Tax Credit, which we can, BITSI, right? So we can boost that base incentive from a 33% cash incentive to 50% cash incentive. And that does great things for your ROI. So we're happy to offer that, and also there's some other incentives that help the company as well. To date, prior to this, we've pulled in 3.1 dilutive, but 3.4 non-dilutive. So again, we got a great partner, and that non-dilutive, opportunity continues as we go forward. So just to emphasize the point, right? I mean, you guys are familiar with this, but basically, if you invest $500,000, you will get back in the next tax year about $250. So again, great opportunity, and we're happy to provide more information. I don't want to be cut off, so I'd like to end with this. So the early advisor, our first advisor, when we got started, was Brigadier General Bill Crosley, and his fight was Vietnam. But when he saw this device, he instantly said, "Hey, if my buddy who was killed in action had this device, he would have retired this year, right? Our boys and girls need this now, right?" So this is an old problem. It's a persistent problem. We've seen it today in Ukraine. We've seen it in the Middle East. I think AI is not going to solve this. So, and I think we found some white space and the ability to help people. So please, even if you just introductions or advice or help, please support us in saving lives. Thank you. huge appendix, so any question?
Well, at the end, I'm gonna ask you to get through it.
Okay.
Because,
Okay.
I did this sneak preview.
Yeah.
Get my eye, get my attention, I'm moderating Q&A, we're going for quantity here. Who's got the
Not
first
quality.
question? I do. So, you'll remember that we saw, also another Baltimore company, June Brain. And June Brain was our introduction to the BITSI program. I think we're the only investors in Michigan who are seeing checks out of Maryland for that, that program. It's great to be us. Kurt, and then Jim.
Maybe it's baseline.
Sir.
How does it work?
That's great. That's a
We
reasonable.
saw the picture.
Yeah, that's a reasonable question. So let's do it now. Let's do it now. How does it work? All right. So let's.
Oh, you knew you were getting.
I do. Yeah. Right. So there are two components
Prepare.
to this device, right? So the big idea is the wearable. So you wake up in the morning, you're a soldier, you go in somewhere dangerous, only somewhere dangerous. This is your uniform, you put this on, and then you put your body armor on top of this. You then can carry the puck. So the puck, there are a variety of pucks. What I'll show you is the one that we're going to market with. So this is in your pouch. This can be stored in your individual first aid kit, in your bag, on canines, in the environment. So the way this works, if I were to get injured, it's a bad day at the office versus calling for a medic, I can be the medic, right? This comes out so that you can pull this out, go front to back, red to red, right? And so at the intersection of that strap and my femoral artery is the most proximal point you can go. Traditional tourniquet can't get, this high. So then you go, we'll use this other puck to show it for the room, but you then take that puck, go to that site, right, and then you ratchet down for occlusive pressure. That's it, right? So it creates a vector of force, it's stable during transport, it's usable, you don't have to do that. This requires no medical concept is the thing, right? So you go to the X, you turn off the tap, and then you get to care. So we open up the window and get this off. So you open up that window from a couple minutes, to several hours to get to the next step. And again, one harness can accommodate multiple pucks, right? So a blast on this side, arm and leg, bilateral, car bomb, whatever it is, blunt trauma penetrating is very, very flexible. Sir.
Jim and then Kristen.
You're selling it so every warrior is going to wear it.
Yes, sir. Yeah. There's a variety of ways to go ahead.
I'm just trying to think through from the military's perspective, cost benefit, number of occurrences, obviously a life is invaluable, but still you gotta do math on
Yep.
outfitting every soldier to save the few that have the incident. Have you done the math on that? Is there, I hate to reduce lives to an ROI.
Absolutely. We
but
have to do
you
the
must
math.
be thinking about
Absolutely,
that.
absolutely. So it's like, there are a lot of ways to do that cost valuing, but the point, I think what's most pragmatic way to look at it is, what are they doing right now, right? So this sector of device, or type of device is procured right now, between $300, $350 up to $4,000. So Roboa is a more high-end procedure, $4,000 per treatment. So that's how much you're spending per incident of trauma right now. Conversely, the traditional tourniquet that law enforcement has, DLA procures three tourniquets to a man every year. So the average warfighter has 3 to 5 tourniquets on their person at all times for all 2.1 million, active duty and reservists, right? So there's already a tremendous investment in this, and relative to everything else, armaments, uniforms are, each blouse is over $1,200 right now, just for the shirt. So in terms of scale of costs, it is not significant for the DoD.
So you're making the case that they're already spending the money per warrior,
Absolutely.
per soldier,
Yep.
and you might be a slight incremental cost.
Exactly, and we can reduce the number, so versus buying 3 to 5 tourniquets, traditional tourniquets per individual, we can drop that to 1 to 2 in our device, and doing that, you still increase your medical outcomes by orders of magnitude, because now versus one medic in 50 having a class 2 device that treats only one leg, every single person now can treat all 4 sites faster, better. So there's other things in the economics, but I think it's worth it.
Moving right along. Kristen, Olena, and then Alex.
Chips and stuff.
Thank you.
That's a lot of information.
Let's talk
Not
fast.
gonna lie, I look away on the pit at some of the scenes, so what is the differentiator to what you're building, or what you built and what they show you?
Yep.
And so then talk about competition and actually the differentiation where you're at.
Absolutely. I think this slide is better for this. So my brain's weird, so right to then left. So traditional means are your Boy Scout, Girl Scout tourniquets, limb tourniquets. They use loop pressure to overcome muscle tension, and then they crush the underlying artery. And then gauze hemostats work by just helping you clot. So as you move up into your torso, it's good to know that your arteries are soft tissue. They're like rubber bands. So when severed, they actually retract into your body. There's that famous Black Hawk Down scene where they lose the femoral. So that's the essential problem. Tourniquet can be put here, but the injury's here, but the source bleed is now retracted and it's gone deep into the body, right? And so that's the big issue with this. The flow is too high for biologics, and then the artery's too high for these. The physiology is too tough. For these devices, and I have the one that was on the show. I have it in my bag, so we can look at it. But essentially, they try to target. They're C-clamps of sorts. They're basically these C-clamps that try to target the artery. They require a medic to know, palpitate, figure out where exactly to go, and then you try to put it on them. But the essential issue was, again, it requires a medic. It's not accessible. And then what they found, it was in the field for about 10 years. They don't work, so they would slip off immediately. So you had about 4 devices from 2009 enter the market because there was nothing, and then no change in outcomes, right? And so in 2021, the DoD delisted all of them. So the PJs, they don't use them. I mean, they have them, but they don't work, right? So happy to talk about why, but essentially, your patient is in a traumatic environment and has to be pulled into a definitive care, and you need a device that's very, very stable and can.
The competition isn't doing anything like that.
No. Sorry. Destroyed this. I'm an engineer. I'm an engineer. Sorry.
Yeah.
Thank you, Kristen. Olena, Alex, and then Katie.
Okay, so in Ukraine, they have a problem with tourniquets, current tourniquets.
Yes.
So when their soldiers are not untrained well, and they apply tourniquets too high,
Yep.
and also they spend too much time on the battlefield, and they are evacuated too late.
Yep.
So my question is, how you will anticipate the problem to apply too high when it leads to high amputation, and also like when we are a long time on a battlefield, that it leads to very severe disease.
Yeah, so we're at the Special Operations Medical Association, so we've seen a lot of pitches from in the field. So Ukraine has the issue of there's kind of like a drone kill box. So if you're injured, you can't even get off the battlefield is one issue. So in terms of limb loss, I think the issue is they're applying traditional tourniquets, but oftentimes too much. Many instances where they're injured on this side, they apply it on this leg, because you're kind of in shell shock, so you don't apply it correctly, and they leave it there just in case, and for days, and oftentimes for days. So there's an issue where you're supposed to do what's called a conversion every 4 hours so that your limb can breathe. That's not being done. That's one issue. There's also just transport out of those who do get off have less severe injuries, so they survive. Those that have junctional injuries do not make it, so they're not. Yeah, so for us, what we can do with that, a couple of things. So now they're using UGVs, so unmanned ground vehicles, to exfil folks, right? So this can be applied by a lay soldier. They're stable at the point, and they can be taken out. So that right now it takes a medic coming to a soldier to do that, right? So now what we can say is we can decentralize that so that each of us independently can do it. So that's one thing we can do to address it. Future designs of this, actually we can engineer compliance features. So we can automatically let your limb breathe, it can dynamically help resuscitate the limb. So those are things we can do to mitigate that.
Thank you.
But it's a tough
Bob,
position.
Alex, and then Katie.
Questions, maybe I missed it for a long day. Can you go over really quickly the use of funds? My second question is not understanding the physiology. If you have like an injury below the knee,
Yes, sir.
where one of your arteries are past the elbow or one of your arteries, does this thing still suffice, or is there a different solution?
Yeah, great question.
Yeah.
Okay. Use of funds. This shows it from an action perspective, but essentially three things. Manufacturing, we need to pay and finance production and inventory so that we can leverage that inventory to complete our FDA studies. We have one more study left to do, if I can speak to regulatory, and also for sales and to get this to market, right? So that's primary use of funds. It's going to enable, again, FDA clearance. That will also, the funds also allow us to make a key BD hire. So all the sales, all those relationships, I manage those. So every special operator and folks in Germany and Canada. But I think if we had more infrastructure, more support, of course, we could do a lot better in the market. So that's kind of the focus of the funding. You know, again, production, BD hire, clearance, and getting market launch, essentially.
Is there another fundraiser?
Kind of. So in 18 months, so this raise will take us out about 18 months.
Okay, so there wasn't on that previously.
No. And then then in the future, you know, we see a Series A in late 27 at somewhere around $6 million. That's growth capital. We should have done the hard work. Started to sell it already, right? So that's the plan. Going to physiology, thank you so much. This really helps, right? So this shows how this works. And so even for traditional, so basically, just get to it. If it's too low, don't use your device, right? So, you know, if it's the ankle and it's perfectly within the purview of a traditional tourniquet, I recommend you do that. What happens in real life on the battlefield, however, is you need an average of 2 tourniquets per injury to stop the flow. So what happens is they say go high and tight first, and then you go proximal to the injury. So in that way, we would still be keeping with standard, where we are the high and tight automatically, and then you would apply it proximal. We then would say, hey, you can then alleviate this flow and open it back up. But that is traditionally, even for low injuries, you go as high as you can, because for a variety of reasons, you need usually 2 to 3 tourniquets to stop a real traumatic injury.
Thanks. Katie?
It's me, we met ages ago when I was with CC.
Oh,
but
shit.
yeah,
What's going on? Yeah.
random.
Yeah.
But glad to see that the new Maryland program is similar to R&D tax credit.
No.
Yes.
It's an angel tax.
It's an angel tax credit, sorry.
It's an annual tax credit.
Yeah.
So I'll ask
For
about
qualified biotech companies.
We shot a video on it.
that. Okay, I'll just sit and watch it. But I was gonna ask about the R&D or the regulatory approval.
Yep.
For the being class 2.
Yep.
Is that based on the training? Because that's interesting that it's class 2 or the stopping the blood flow.
Yeah, so we have a clear predicate. There you go. It's cool. So yeah, so we're a class of device because we're a vascular clamp. We're essentially a vascular clamp, but we're the first kind of soft goods vascular clamp developed, right? So clear predicate identified. The FDA ratified that in our first meeting. And all the other ones, if you search junctional tourniquets, they're all vascular clamps, all class 2, all require medic, you know. So we're still class 2, but what we're doing is, here, versus we're putting all the risk on providers. We're saying, hey, it's good enough a device, simple enough, where any lay person who's trained on the device should be able to use it without significant.
That was, my concern is because usually it's class 2, they require a professional.
Exactly. So that's kind of the white space we're creating. You know, we're saying no, we've created a fully predictive system, and we didn't want to. They told us it needs to be fully predictive, so we went and built it. But it is fully predictive, so that a layperson doesn't have to prescribe the positioning. You know, we're pretty sound in our approach.
Can you help with lab
Yes, yeah, need some folks on that. See.
Jim and then Kurt?
I was wondering if you could speak more to the sales process into the DoD. So you seem to answer a concern I had, which was that it's a large, bureaucratic, long sales cycle. But then you spoke to the fact that you've got a hunting license to now go and get small units.
Yes, sir.
And so I'd love to
Phrasing?
understand. Pardon?
Yeah, phrasing.
Yeah. But I'm curious to hear more about what it was that you got that enables that. But then also, it seems to me to also have a different cost to your commercial engine. So the long sales cycle for a big military contract, it does have a payoff if you're successful.
Yep.
You don't have to spend a lot of money going door to door, so to speak.
Correct.
You seem to be describing a situation where you're going to go door to door, which is going to have a higher sales cost. So just wanted to learn more about all that.
Yeah, great question. I think we're on the hook to do both, right? So I think our job is to validate the value both for ourselves, for for strategics who want to work with us. We've already had offers of acquisition, and they said, hey, once you're post FDA and you got $500,000 profitable, we're gonna buy you. So we're gonna do both. So we therefore have to rely on our relationships. There's a slide about this. I think this is helpful, right? So we're gonna get into the market, and I think we can do that. We have the relationships, we have the network, we have the reach to do that ourselves, and we have license to do that. That's how most new innovations make it to the big army, as special operations and these elite groups see the latest stuff, they champion it, and then they buy it. On the other side, we're gonna leverage strategics. So ADS is a $4 billion a year strategic that sells every tactical gadget, and they have every customer we will ever hope to have. North American Rescue was bought by Henry Schein recently. We know their team. The guy there was an old surgeon at Fraser Regiment. So we're going to leverage. We're not going to do it ourselves. Our job is to start it, sell the first couple under 10,000, and work with strategics that have that customer base and have the sales engine to drive growth. Right. So that's the plan.
Please advance your slides to the
All
end.
the way.
And please talk to Kurt as soon as we adjourn, because his question got aborted.
Awesome. Great. Thank you.
All right. Jim? And I become the kind of accidental subject matter expert on Maryland tax credits from having run that gauntlet once before. Hit me up and talk to other investors who've done that. Band Connect comes to us also from Christina Drake and the team at Renaissance Venture Capital. We met Band Connect at Undemo when?
I believe Craig met them.
It was Craig.
Yeah,
Yeah.
2024 maybe?
2024. And here to present is Rohit. Rohit, your role is?
I'm the CEO.
You're the CEO, but you weren't going to present. CFO.
Abby is the face of this company. It
Oh,
was
you're
her
a fun
idea.
face. What are you talking about?
Yeah.
All right, here's the
She-
down button. The down button is your friend?
Down. Yes.
Yeah.
And I do have, just as I was saying, I do have appendix slides as well, so I'll
Then
go
just
over to-
advance to the end.
Yeah.
All right.
Thank you for that, and that was a great presentation. Yeah, Abby was supposed to present today. She came down with a case of the flu, and we decided it's better off not be. So you got me?
Yep.
So Band Connect, we're a data-driven platform for orthopedic rehab. We're going to get into the details over here, but a few key points to talk about. We're clinically validated, so we've been at this for 6 years. We've been through.
Use your outdoor voice.
Louder?
Yes, please.
Yeah.
That's why she was here. So is that better, right? So we're clinically validated. We've been through 6 clinical trials, which I'll talk about. We have a strong IP foundation, 2 patents and a family to follow from there. Our prior 2 rounds were funded by Jumpstart Ventures up in Ohio and Techstars as well. So as I mentioned, we're a data-driven platform for orthopedic rehab. Essentially, in a simplistic sense, I was explaining this earlier, we're providing objective data to a largely subjective process today. So when we go through any form of rehab today, there's a lot of subjectivity. You have a PT holding your hand and checking your pressure and your strength and doing a lot of analysis in that manner. We're adding data to that process to make it more deliberate and scientific. But we're also doing it across a couple of different care settings. We're doing it in the clinic, and we're also doing it in the home setting. So the home setting is intended to be about 80% of the care that we go through in the rehab setting, and it's totally blind from a clinician's perspective. And so we provide the data across both settings. And most importantly, clinical quality is really, really important, but in a care setting for a clinician environment, ROIs are equally important, if not more, and so we can demonstrate a 3x ROI there. I think we've all been through physical therapy of some sort. I have, right? So clinics are awfully busy. It's really hard to get an appointment, but only 1 in 10 are actually available to us, actually access care, and only 1 in 10 actually complete their plan of care. So it's a pretty broken process, which is demonstrated in the spend. That's the annual spend. That $380 billion actually exceeds the healthcare spend for diabetes and cancer. That was surprising to me when I first heard about it. And so it's a big problem. Lots of us go through it, and it's highly subjective, and it's not happening well. But let's look at the environment itself. The clinicians are suffering. Their reimbursements are going down, the costs are going up, and so margins, single-digit margins at best for a lot of PT clinics. And all of this is driving a lot of focus on productivity at the PT level, which is obviously causing burnout. And so we have a vortex of sorts over here where things are not getting better. And then it forces certain behaviors which actually compound the problem, as I was just saying. So forces of emphasis on in-clinic visits because there's no value-based care, right? And most of us don't like in-clinic visits. So why is this a good time for us right now? Because those factors have been around for a long time. So why now is payers are getting more demanding. They want more data about their patients because the recurrence rate is really, really high. And that number that I showed earlier is not getting smaller, it's only growing. There is also, on the positive side of the equation, a new reimbursement that came into play 3 years ago. It's called remote therapeutic monitoring. I'll talk more about it as a part of our value proposition. And then there are other companies, some unicorns out there. Kristen is familiar with Hinge Health, Sword. There are a couple of others that are out there, heavily capitalized, that are focused on disintermediating clinicians. That is in their annual report. That's their goal. They want to provide technology to find ways to disintermediate the clinician. And on the surface, it's fantastic. These companies have done really well. We believe that doing what we're doing, targeting the clinician workflow, is more sustainable. So that's really what we're focusing on. So I want to say, before I get into the technology, that we're more than a tech platform. We're really about trying to drive that continuum between the patient and the clinician. In our case, we're also dealing with a lot of post-acute conditions, and so it's that three-way communication cycle which barely exists today. If you've had any orthopedic surgery, I can guarantee you it's been a two-way conversation for the most part. And when you go back to your surgical post-op visits, they're pretty much blind in terms of what you've been doing with your therapist. And so, it's a very inexact process that we're trying to bring together. And from the data points that we have, we can show the data that it is working. So our platform has two different varietals today. If you see on the right over here, that's our upper extremity platform. Basically a handle that connects to resistance bands. Resistance bands is a very common modality for care today. And all we're doing is adding the electronics to make it more relevant and add the data associated with it. We also have a lower extremity variant, which is a cuff, which is right next to that. We started with the upper extremity, and we launched the lower extremity earlier this year. They're connected to a mobile app. That's actually the patient's mobile app. The clinician has a clinician app that allows them to accept the treatment and also monitor the patient as they're going through their treatment, through their home exercises, and also what they're doing in the clinic as well. We don't use cameras, so contrary to expectations, we don't use cameras or on-body sensors. Our goal is to make this as ubiquitous as possible, because one of the key things, there's a lot of technology out there, but in order to make it usable, you have to make it as transparent as possible, hide the technology. So we essentially worked hard to hide the different technology out there. We talked a lot about FDA here. We're a Class 2 510K exempt classification. So we're registered with the FDA, and then we're following all the guidelines associated with that. So this is the workflow that happens today. So all we're doing, we're not changing the workflow like I mentioned earlier. We're just adding data to that existing workflow. The first segment over here is what we do in the clinic today. The clinician and the PT is working with you to help evaluate you, but at the same time they're also making you go through the motions that they want you to do at home before your next visit. As they're doing that, our technology is actually recording various aspects of the movement, pace, range of motion, and if they're using resistance, also the resistance associated with that. When the patient goes home, and when we go home, not only is the app telling us what to do and how to do it, but more importantly, it's telling us how we're doing relative to that in-clinic experience. So it's personalized to where we are in our care journey. So it's not this perfect human that's telling us what to do. It's what we did in the clinic during our last in-clinic experience. And obviously what this says over here, I'm sorry if I'm blocking you, is what the clinician can do. They can view things like pace, both the concentric as well as the eccentric motion, which are important characteristics, hold times, starting orientation, strength, and obviously range of motion as well. So there's a lot of data that we're collecting that comes in, and that process, down there, that process iterates and goes through the process. We are unique in the fact that we're dealing with the clinician journey. The other unique part about what we do is that we are the only vendor out there that is providing force measurements, strength measurements, and both these concepts are a big part of our IP that is out there. I can dig into the more details here during the Q&A if you allow. So, as I mentioned, we're clinically validated, and we've been through. So these are some of the names that we worked with: Bon Secours. We just started actually with NYU Langone. And we're working with Cedars-Sinai for many years, university hospitals in Cleveland. And what this demonstrates in a nutshell, this is a busy slide, right? What it demonstrates in a nutshell is that we are improving clinical outcomes by functional outcomes, faster progression of care. We have clinical data. It's in a manuscript that's being published with the Journal of Elbow and Shoulder Surgeons. And in addition to that, because of the workflow, we're also demonstrating higher completion of care, 95% higher completion of care. No-show rates, which are an endemic circumstance for clinics, is reduced from 12% to single digits or 1% or lower, and significantly high patient compliance. So typical patient compliance is supposed to be between 10 and 30%. We're showing closer to 80% consistently, and we've been doing this for 4 years with patients. So there's a lot more to talk about there. But I think somebody had asked me this earlier. So what we're really about is creating this environment for data collection that actually doesn't exist in the industry today. Like I said, we're blind in terms of what a patient is doing at home during their therapy process. So we now have the ability to actually map to a progression pathway for a particular phenotype. That's not now, but that's the data that we're working towards, which obviously gives us a lot more opportunity as we go forward. So we're doing this with 6 customers today, and these customers are some of our research partners have converted into non-research customers with us. We're also working with orthopedic groups that have rehab clinics, and we're also working with independent clinics. I'll get into that a little bit more. But what we're demonstrating across all these is that we are driving value, the 3x ROI that I talked about. The way we charge $200 per patient per diagnosis or for that condition. A typical rehab duration is somewhere between 3 and 4 months. And so we charge a fee associated with that, in addition to a platform fee, which is an annual recurring fee. Our goal is to get to somewhere north of 2,000 patients within the 12 to 15 month period. And what this slide demonstrates is that just with the existing customers that we have, we can get to a significant chunk of that particular target goal. That doesn't stop us from what we're doing with our significant pipeline out here. As I just said, about 60% of our enrollment target is already at hand. So to do that, we're raising a $750K, what we're calling a bridge round. It's a very simple instrument, a valuation of $9.5 million with a 20% discount. This is a chart of the picture, so we have a pro forma of it, and we can share that through the diligence process. But what we're demonstrating is is that we're getting to a $30 million run rate in 2030, which then allows us to get to a enterprise multiple of about 150. So we're being conservative. So this is a 5x enterprise multiple, if you will. And exit will come from where is the question, right? So it will, orthopedic manufacturers, they're already investing in tools that allow them to engage with patients outside of the OR, right? So they spend a lot of money building these tools for the OR, but they have very little line of sight or control over outcomes, which is largely based on rehab that happens post-surgical conditions. And so they're very interested in that. We've already been approached by a couple of these larger vendors that are out there who are looking to, expand their portfolio. They like our technology, they like the differentiation that we offer. And then there's been some precedent activities with ecosystem vendors, EMR vendors buying these platforms as well. So we see a lot of opportunity from an exit standpoint. We've already had some early conversation, but clearly we don't see the time for this for some period of time. The biggest part is here, right? It's the team. Abby was the one who actually started with this particular concept. I connected with her as an EIR at the University of Cincinnati Venture Lab. And we ended up starting a company, and this was 6 years ago. She's an industrial designer by trade. A lot of what you see here, so show and tell, not as attractive as what we just saw, but it's out there. And she has a footprint over everything that we're doing here. We also have Dr. Hassan, who is our CMO. He's a practicing orthopedic surgeon at Bon Secours as well. So he's been instrumental in a lot of our clinical activities. And we recently, about a year ago, bought on Tara, who's a trained PT. She's managing our customer success operations, and we're just recruiting a couple of others during the course of this year. We've been fortunate. I think we heard about the advisory group. Clinicians love our technology because it's doing something that they haven't had access to do before. And I can see them walking this way. This is my last slide here. So I think I just want to close the fact that this is not a technology. This technology has been proven. It's been clinically validated. We have early customers and early revenue, and we're marching our way towards growth acceleration. And that's really what we're looking for the funding for.
Right on time. Great when you have a company where two great presenters can be out in the field talking to investors.
You're kind.
No, you did great today. And Craig would be overjoyed to see you here, and he sends his warm regards.
Yep.
Let's do moderated Q&A, starting with Katie and then to Jim. And Chris.
Can you talk a little bit about, you want to be the clinical way there, but you've also, there's several other folks in this space that you didn't mention in the presentation. They're in a very similar trajectory. So what really makes this edge of the clinical data layer? Is it the fact that you're able to help with the diagnosis and pain management, understanding? Proterra Health is one that I'm thinking of in particular that's many more published papers on kind of the value-based edge that they're taking, but it doesn't have like a device attached. So is it the device that's the really differentiator here, or is it, what is the other pieces?
Yeah, I think one key element, I think it's fair to say right now that the data just doesn't exist. There may be others trying to get to the same place, but it just doesn't exist. The key differentiator that we bring to the table that it has all these other players interested in us is that strength. Yeah. Because every rehab results in strength measurement and enhancement. Because that's the true where you measure success. So I would say that's the key part, but I'm sure there are other elements as well.
Jim, Chris, Kurt.
I apologize if I missed it, but I like the fact that you're partnering with the clinics and you're making the point that it's better outcomes. But are you also, what's the financial impact for the clinic? Can you take us through that again if you already spoke to it?
Yeah, no. takes a while to walk through, so I kind of skipped through it, so thank you for the question. So what we're driving is at least a 3x ROI, and the components for that are as follows. There is a reimbursement in place today. It's called remote therapeutic monitoring. It's a CPT code. It's not a device-specific reimbursement, so we didn't have to go through the process for that. It's a monthly code in the range of $165 or higher for commercials. CMS is $165. But the more relevant aspects of the value is actually based on the fact that we as patients attrit at a very high level. 70% of us quit rehab therapy after 3 weeks, 4 weeks. Right. So, and the super majority do not achieve their plan of care compliance, right? And so what we're seeing is a 95% completion of plan of care, which is unheard of for the clinicians that we're working with. What that means is there's less attrition, they're in therapy longer, which means they're actually getting paid more because of the increased number of visits.
So it's customer retention, it's not a sharing of your $200.
Correct, correct. And then the reduction in no-show rates. So, I mean, this is really terrible in what's happening in clinics today. 12 to 20% of us don't show up for our appointments without advance notice. Okay? Right. And this is consistent across the country. Like I said, we've been at this for a while, and it's very consistent data. An engaged patient tends to show up, right? And so we're reducing no-shows at a significant level through that. So I'll just summarize it. Average revenue per patient, and this is empirical, so you can validate it, is around $1,000 or less. We are demonstrating through the patients that we have treated that we can generate more than $2,000.
The customer believes it?
Yeah, I mean, they don't believe it at all, because it's hard for them to understand. They understand all the different concepts, but that's why our go-to-market actually includes a phase 1 deployment, where they can actually realize the value. They pay for it, so we don't. They pay. A lot of our engagements go through that phase 1 deployment, but they can actually see the value themselves.
And have you had enough of those phase 1s that you know what the conversion rate is, or is it too early?
No,
to
it's
tell?
too early for that right now.
Understood. Kristen, for Elena.
Hey.
Two-part question. So the data layer was what I was thinking about too. And do you envision that your data would move into the EMR HR systems? And then secondarily, I didn't hear a lot about AI. What are you doing? How are you using it? Is it predictive? What does that look like?
Yeah. So I think let me go back. This is all AI driven, and we already have proof of concepts of these in play. But the point is that we don't necessarily have enough critical mass to actually deploy. The first part of your question, is it in the EMR? It already is. We have to, right? This information has to be in the EMR. That's the source of truth for any of their billing activities that they do out there. So it already is there. There is ML in the algorithms that we use for calculating what we do. So it's already there. We just don't talk about it as such because it's pretty widely used. But this is truly where the AI dimension comes in. So we're using AI to help benchmark data for recovery progression. This is not a part of the conversation in clinical care today to say, where am I going to be recovering at? What pace am I going to be recovering? And as I'm recovering, where am I relative to people that look like me, my phenotype?
That's interesting. It's not diagnostic.
Yeah.
It's not a treatment plan.
Correct.
It's tracking progress.
Right.
Oh, you just really navigated that well, because they won't let you do the other two.
Yeah. No, I know that. Yeah.
Thank you.
Kurt and then Elena.
Yeah, my questions were kind of combinations of one that had been asked. One was about the ROI, and it sounds like it's not a cost reduction, it's a revenue opportunity.
Oh, totally.
And then on the your kind of go-to-market and your sales cycle, it sounds like you have I was curious to know when you first contacted a potential customer into them being a paying customer, the process you have to go through. It sounds like you don't have a lot of data around that just yet.
Yeah, I mean, I think that's what we want to do over the next 12 to 15 months, because that's when we want to sort of hit our growth acceleration phase, right?
Yes.
So And the timing is different across all three subsegments. So when I talked about the market earlier, let's see if I can get there. So, sorry, just give me a second. Here, so this whole area here is just our beachhead. It's our initial target market. So rehab clinics exist in health systems, they exist in orthopedic groups, and they exist as independent clinics. The sales cycle goes in reverse order in terms of speed. The independent clinics are faster, orthopedic groups are less of a challenge than health systems, which are never fun. So I think that's sort of the pace that we see out there. In terms of where we focus and target as we go forward, we've been fortunate to have tremendous success and penetration into the health system market, because one thing I didn't talk about is surgeons love us, right? Even more than the PTs, because the fantastic work that they do needs to be supported by the work that happens by the patient afterwards, right? And they have no control over that. And their outcomes are based on what happens after the fact rather than the surgical event themselves. So they can have the sexiest, the most complex surgery that's out there, but the outcome is based on some other actor. So they love us. So what I was trying to say was they have been introducing us to other networks across the country, which is largely how we've built up both with the names that you see there and our pipeline beyond that is largely out there. Now we got to be smart in terms of figuring out if that's where we spend our time, right? Or try to grab revenue elsewhere. And those are the things that we're evaluating right now, which is what we're trying to do over the next 12 months.
Could you flip to your slide where you said you're at 60% of your customer target?
Yeah.
And just maybe speak to the significance of what's happening there?
Yeah, so because we're currently, so Bon Secours is for the market that we're in, has 17 clinics. We're currently in 6 of them, right? So every one of these opportunities, when you get into a contract, it's a land and expand sort of a situation.
Well,
you
not
have
for the one-offs, but
yeah,
with
yeah.
this sector.
Yeah, yeah. And so that's, we're in 6 of them. With Oxford, we're in 3 of their 14. So that's really what I mean. We can probably meet 100% of our goals over there, but that won't be our target, right? So that would be, we want to continue to drive and experience sales motion across all these different targets, so we can get smart about what growth acceleration looks like, including distribution pathways, which I haven't talked about.
Alana?
I like your technology, and I hope it will be relevant for my mom to recover. It's right. What's the cost of manufacturing, and also your adoption strategy?
Yeah. So I'll go on the first side. We're still low volume. We're not at the MVP level, gone beyond that. We have a contract manufacturer, but it's still in low volume. So we're building in 200s, 500s, and so on and so forth. So we're still early in that stage. Our cost today is in the range of $175 per unit. And I have a kit there, so I'm happy to show you after we hear it. That includes everything in there. It includes a door anchor, resistance bands, phone holder, everything that a patient needs to do what they need to do. We believe that number can come down to some $75 or $80 at volume. The bigger attractive piece of this is we're not selling this as hardware. It's actually a subscription service, and the patient, we do the provisioning, the patient is delivered the kit, the clinic is delivered the kit with the patient, and the patient returns it after the course of their therapy. And we are estimating 4 in a pro forma, 4 uses per equipment. So if you can see, our unit cost is significantly low on a per patient basis. We actually make our money back with the first patient.
Buried the lead. I was gonna. Now I see how you do it.
Yeah.
Pause button. We've got a couple of visitors today that I somehow neglected to introduce. Faye and Olivia. Faye comes to us from the University of Michigan Bio Interfaces Institute, and Olivia comes to us courtesy of MIHQ, where you're the Ypsilanti facility coordinator. And I was reminded of this because Faye had a question for Roni, please.
Thank you for your presentation. And sorry if I missed it, but did patient actually said, I think yes, because one of the value proposition you mentioned, it was like less complicated, they make it more engagement for the patients, how does happen, and also you mentioned compared to common PT, regular PT is less complicated. They ask how this happen.
Yeah, I don't know about the last sentence, but I can talk about all the other things.
It's not additional.
Yeah, additional. Yeah. So I mean, I think I'm happy I got it here. It's show and tell. I can show it to you afterwards.
Yeah.
But here, what happens when the patient's at home?
Doing reps now.
So when I'm a patient, when I'm at home, okay, I have my app in front of me. It's telling me which exercise to do. It tells me what my starting position is. Okay. If for some reason, you know, I'm holding my hand this way as opposed to this way, it won't let me start the exercise. So that's just one example. So as I make my motion, right, it's telling me how I'm doing from a range of motion standpoint. Pretty easy there. It's also telling me how fast or how slow I'm going, right? There's haptic feedback that tells you, you know, when to move your hand after the hold. The whole time. There are any clinicians will be extremely important, especially for strength exercises, and that is curated by the PT. So just imagine today's environment, like if you're taking resistance band home, do we even know if you're standing 2 feet from the door or 4 feet from the door from an exercise? Entirely different experience. One is dangerous, but we also, as a part of that starting orientation, make sure there's the correct starting orientation to start the exercise. So all of these are experiential things, and then when you're doing your reps, it's basically guiding you through that. So if you move your hand between the rep, it actually says go back to the starting position. We have patients coming back to the clinicians, and we did a lot of clinic visits early on, you know, basically saying, I really did my reps, you know, I want you to know that I really, you know, it's there in the system, but you know, they were really concerned that what they did wasn't being counted. And I'll just start, there's another point that comes up often, does it support all age groups? The majority of our patients, because of the trials that we did and so on and so forth, is 65 and older, majority. Our first patient scared us because she was 73 years old. But it worked out well. So.
Nobody got injured that day.
No.
Okay.
We haven't had any negative experience.
Comparing insurance.
Yes.
I have a fondness for Cincinnati startups. My first startup was in Cincinnati, and we're so excited and so pleased that you made
Thanks for having us.
Made the trip up here.
Yep.
Rohit with the
Thanks for the question. And I forgot to mention.
You're gonna have to fast forward this.
Yeah.
We're gonna have a little clinic, I guess, after the program completes. But moving right along. That's your last slide. Your first. There we go. No, that's your first.
That was
slide.
first.
Yeah, so
Down button is your friend.
Sorry.
Oh, good. It's not intuitive.
There we go.
Thank you. Yeah, what I was going to say was that we do have about 200, just shy of 200, sort of committed as a part of a 750K.
MagWerks Vision presented to us 5 years ago. It was a very different group then, and you were a very different company then. Jeff, are you presenting as well? Is just Michael?
It's Mike, but I'm
Oh, okay. The down button will advance your slides.
Thank you very much.
Here to describe all of the very interesting progress that MagWerks Vision has made since we saw them 5 years ago. Founder Michael Pickles.
So this is just a brief update on our performance. So this slide has a purpose, and see what you've been missing is basically what our technology illuminates areas. I'm not going to get into too much in technical, but I said we're revolutionizing vehicle illumination through advanced materials and optical engineering, which is what we're all about. We have about 14 patents and counting right now. So a short business performance update. We're already an approved supplier to the Department of War, case code 9787. We have secured and completed phase 1 and phase 2 of a $1.9 million SBIR program. the problem. There's a lot of obsolete equipment in the military, specifically lighting. So we're replacing a no longer available light bulb, very simple, with a halogen light source with an advanced LED module. Problem, and as you can see there, that's an example of the 196 howitzer. So in the process, we have fully validated our optical system, silicon technologies to military as well as civilian standards. So it's all done. The phase 3 sole source, which is critical just for us, production contract starts this summer. We were told just this week after I did the slide, August. $5 million estimate with a rapid retrofit because the vehicles would be switched, 2 lamps per vehicle switched over as soon as the vehicle comes in for any sort of maintenance operation. Nobody burns out every time, so it's going to be quite quick. This is our forecast, where we're going with next. Along the same vein, we have identified the next big issue to hit the military, which are the headlights on vehicles that everybody knows, the M1 tank, as well as even the new AMPV. This have a very small 4.5-inch side headlamp, which is very outside of what's used in the civilian world. It's a steel beam that was first introduced in 1961. It's that old. It's been out of production since 2017. So supplies are about to run out. The military doesn't know the problem until the problem hits, which means no more products available. So nobody else has been able to develop a lamp that size on account of the size. LED technology just doesn't get to street legal, road legal headlight. Ours does. So we already have developed a proof of concept, prototypes with invitation approval, and this is a conservative 50 million short-term opportunity. But then, moving farther forward, we know now that the Department of War has specifically requested industry to develop headlights with built-in infrared illumination. That's for covert operations so they can see without being seen. How is it done today? That's an example of the M1 E3 next generation tanks shown at the Detroit Auto Show. You can see it's a separate illuminator. Brand new vehicle just introduced in 101 A7, separate illuminator. The military wants it all in the same lamp unit so they can retrofit everything. Integrated headlamp approach patent has been already filed, and we already have are developing the prototypes. We know it works. We know we can uniquely do it. I can get into the technical details, anybody who's interested. That's 420,000 vehicles in the U.S. fleet inactive and 250 in reserve. We estimate the cost per headlamp, 2 per vehicle, at $600. Transaction price $600 per vehicle. You can do the math. Specific short and medium term strategy for us is, first of all, replace obsolete components, which we're unique qualified in a position to do it, and then next go after new defense markets. We are already in the process of signing a global military distributor, a US-based company. We're just about in the final stage of inking a contract. And a little technical, just to give you an idea. Last week, there was a major lighting conference in the Detroit area. Our main competitor, a company by the name of JW Speaker, presented their latest technology. I did as well. And you can see the yellow and the red is us. Low beam, high beam. The black outline is a corresponding performance of our nearest competitor, a company that's $100 million in annual sales, and it's been around for 96 years. They are by far the most recognized, biggest in the business. And you can see that we deliver, particularly as you can see on the sides, levels of illumination that current existing technology cannot do. We can, and with that, you can see the shape of our lamp, of our new optics. Nobody has seen anything like it. The purpose of us presenting last week was to validate that the whole international industry could see what we're doing and any issues. Nobody said nothing. So with that, broad market opportunity moving forward to mobility, like from e-bikes, buses, heavy light-duty vehicles. And with that, I'll leave you with all of we have a remaining 120,000 opportunity in our run.
Pickles. BioMEMS has been in front of us twice, 2 years ago and 1 year ago. And here to tell us what's going on this year, Diane Buies. The down button is your friend.
Hi, friends. Nice to see so many friendly faces, old ones and new ones. The down button is my friend. And is it, oh, yeah, I got it. All right, my name's Diane Buies. That over there is Andrew Dahl. And we're delighted to come back and tell you about BioMEMS. So when we talk about diagnostics, the playbook is get to market fast with something that people want, customers want, and minimal technical and regulatory risk, because that gets you to faster exits, good returns for your investors. So that's what we're doing. We've got a 5-minute test that is easy and rugged, does not need a lab, doesn't need a lot of manipulation. It is point of care, which means anywhere you want. It reads 10 different things. It's a platform, 10 different things that you want, different types of fluids you can use, and it does that with high precision and accuracy. And so I'm holding the chip in my hand. Andrew's got the cartridge that the chip goes into, the consumable over there, and that then goes into the handheld analyzer that beams the data that you measure into your tablet or your smartphone, where it can go into your EHR. You get that wireless readout. And so it is simple, no lab skills, no lab, and it goes fast. Faster and more accurate than sending your samples out to a lab, which is what you usually do. And so our go-to-market strategy is really partnering. That white fades out a bit, but it says strategic partners. And what we're talking about is really big pharma companies that have a need for testing. We're talking diagnostics companies and labs. And so what our partners do is identify the market demand and specify the biomarkers, specify what the heck do you want me to measure? I can measure whatever you want, but what is it that your customers want? And then they own the customer access and commercialization. And what we do is we develop, manufacture, white label a test for them under exclusive license. We retain data rights. That can be really important if we want to develop subsequent tests. And our revenue is cost and royalties. So this is an update. So I'm not giving you a whole pitch about why that is really important. And this is a really busy slide, and I get that. But because it's an update, I want to tell you what we're doing and what we have been doing. And it is validating that business model. So our first customer approached us, and it is the largest manufacturer of scientific pet food. And so they said, can you make for us a dog cognitive decline test? It's a cash business. So your veterinarian gives you a comparatively cheap test, and you walk out with hundreds of dollars worth of really expensive dog food. And so our answer was, yes, we can do that. And we went through a feasibility study. And then we went into product development, and that's what I wanted to show you. These are pictures from our lab. You recognize that chip that I'm holding. These are tiny, tiny drops, putting 10 different tests on there. And so we're ready for contract manufacturing. Our customer is very happy with us. We're proceeding according to plan. And when we're talking cognitive decline, that may be really interesting in humans in the future. So, and retaining the data rights can be relevant in that context. And another potential customer approached us. We are in contract negotiations with a large organization in the autism space. So they want us to measure pediatric autism. It's not signed yet. I had hoped that I would have be able to update you with good news today, but we're in negotiation. So when you look at what we can do, it's a platform, right? So step one, the canine, we've done the preliminary steps. We are ready to go into cartridge production and go into making the analyzer. We expect about 24 million ARR in 2029 with that. So the reason we're back is because we are close to two really interesting value inflection points, and that's interesting for investors, just before the company changes in value. And so we're getting close to that value inflection point with the dog. And as soon as we've signed with the autism company, we have validated with 2 customers that our business model works and that we can continue doing that pending partners, right? We can relatively quickly move through the paces in making more of these tests. And so the opportunity here is to join before the valuation jump. We are raising a $4 million round at a $16 million pre-money valuation. We're expecting that 5 to 12x jump in the coming 24 months. We're poised for the dog cognitive health customer, and we're negotiating the contract with the autism customer. More to come. And what the money is going to get us to is really produce a number of those cartridges, produce a number of the analyzers, and get the app out into the market so that we can really jump there. We've got a phenomenal team. I'll tell you everything about it. The message here is we validated the business model in order to be able to do what we do. Get to market fast, something customers want, minimal technical and regulatory risk. And with that, thank you.
Diane Louise. And I see an opportunity for one of those Pointe Angels special contingent term sheets. We get the contract introduced in the house.
We'd love to talk about that.
All right. So now to the part that we all look forward to. There's cards on your tables with a QR code, and there's a big QR code right there. This is how you tell us which companies impressed you today. By taking $1 million and investing them in these 6 companies. There's a 7th option, which is none of the above. I certainly hope that it gets nothing. Spread your million across these 6. And do it as well or better than Michaela. Michaela, the dirty little secret here is she wins Shark Tank alive.
Whoa.
Yeah. She's kind of a ringer though. So I think it's time for Michaela to get the Spirit of Pointe Angels Award. And Michaela, if you can come up and give us your press release, I would certainly appreciate it. Come on up.
All right. Yeah. I wasn't sure if you were doing a reveal.
You're the reveal.
Yeah. Okay. Well. Yeah. Well, thank you, David. So a little bit, I'm gonna take a moment to give a quick professional update. So at the end of the month, I will be leaving my position here at Pointe Angels and continuing on to my next chapter at M3D in Ann Arbor. So I'm kind of smiling through some tears here. But yeah, I just, I was driving here and I was kind of reflecting on the experiences I've had over the last 3 years with Pointe Angels. Yeah, and it's one of those things, when I started working with Pointe Angels, I expected to learn about venture capital, a lot about angel investors, maybe a little bit about deal flow, and what caught me by surprise and what I wasn't anticipating was this community behind early stage capital in Michigan. And it's kind of invisible if you're not in the thick of it. It doesn't go on Instagram often, it's not TikTok reel worthy, but so much of the Michigan and beyond innovation ecosystem is built by the innovators, the early stage investors, the ecosystem partners that are here with us and sponsoring these events and making connections for the entrepreneurs to continue their systems both in capital ways and non-capital ways. So it's been such a privilege working with you all. I want to especially say thank you to David. You're a kind, inspired, and one of the more unique human beings I have ever met. And so I just really appreciate working with you as well as many folks in the room here on our executive committee, our screening committee, Kristen, Alex, Jim, there's more people here that I want to name. You dedicate your time and your resources to make this group what it is. So, thank you. It's been
And we're not losing Michaela. She's going to M3D. So maybe you'll be here to present an update? or-
Yeah, you know,
Yeah.
we're part of the portfolio, so I'll be there, and if you guys frequent the bio socials, I'll be around there as well.
Yeah.
Yeah.
Michaela, it has been our privilege for you to improve the standing and the operations and just the fun of this group. And so a small token of our affection and appreciation. So then we have something to remember us by.
Thank you. Okay. Ooh, what do we got?
Try Tiger's Eye.
Oh, oh, ooh. Oh.
Special one.
Is this the first Pointe Angels unit?
She designed this product 2 years ago, said that we should have these.
I know,
I
This
think
is
she was.
true. You're
Yes,
gonna
it
catch me
is.
on the golf course in this.
There
With
is a golf
AceCam,
fest.
right?
Yeah.
Whatever, yeah.
So.
Nice.
Thank you.
Stick around, because she's Spirit of Pointe Angels, she's going to join in the deal bottle
Oh, boy, yes.
ceremony.
Yes.
Has everybody had a chance to play Carp Tank?
Yes.
All right, I'm going to, yes? No? Maybe so? Not yet. All right, so I have a